Hello, chart watchers, and welcome to this Monday, September 10th, Market Watchers Live Show with your hosts, Tom Bowley and Erin Swinlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, we start off a brand new week with the Dow Jones Industrial Average currently up 8 points. The S&P on a relative basis doing much better, though, up 9.5. The NASDAQ performing well, up 22 points. Russell 2000 was up quite a bit more earlier, but still remains up 4 points. 10-year Treasury yield, we saw a big move up on Friday, got up to about 2.95%. We have backed off a little bit there, back down to 2.93% today, but still remaining in an uptrend off these past couple of weeks. Volatility index, big move back to the downside, down about 5.5% or 0.81 today. Industrials leading. We're going to talk quite a bit about industrials. And these are 5 of the industry groups here that are performing pretty well. As you can see, I'm going to take a look more in depth as we go through, but clearly a very nice day so far for the industrials. I think that could continue, but again, we'll talk about that in a bit. Okay, Erin, it's Monday. Another week started. Did you have a good weekend?
I did have a great weekend. How about you, Tom? Did you have a good weekend too?
My Redskins look good. I got nothing to complain about. My Hokies had a big day on Saturday, so from a sports perspective, it was a good weekend. So that normally means it's a good weekend for me.
Yeah, USC's first test against Stanford was a fail, but hopefully we'll get a little bit better before the season continues on forward. My fantasy team, I lost, so as far as NFL is concerned, I'm not happy because I didn't win my first week.
Well, I do have one problem here in South Carolina, and that is this hurricane that seems to have a bullseye
Oh, great.
coast somewhere on the Carolinas. It's probably going to come ashore later this week. So, and they're actually looking for it to intensify. I think right now it's Category 1, but they are saying maybe 3 or 4 by the end of the week, and that would not be good for the coast. So, kind of bracing for that, but that still a few days away. Maybe it'll turn back out. I'm hoping it'll turn back out and they'll get it wrong.
Yes. Yes, absolutely. I think there's another hurricane out there too, in the Hawaiian Islands again, is what I had heard. I don't know.
Different ocean, different ocean. I'm not worried about the one
Nope.
hit Hawaii, but I know obviously we've got folks out in Hawaii that definitely are bracing as well. So never a good thing to see a hurricane heading your way.
No, not at all. All right, but do we have a hurricane headed our way this week in the market? That is the question, isn't it?
Always the question.
All right, well, let's look at what's coming up this week on Market Watchers Live. So, tomorrow you're going to be doing a workshop on trading strategies using a strong earnings chart list. So, that should be very interesting. I know a lot of people like your strategy. Brian Livingston will be joining us. Saving with FinTech is what he's going to talk to us about on Wednesday. Thursday, we have Grace and Rose coming in from the mothership up there at stockcharts.com in Seattle. And yes, so it should be a very good week. I know that I've got sentiment coming up on Friday as well. So stay tuned for that. But today, Monday setups, we'll see how we did and what we think will be good for next week. Earnings spotlight, Tom's going to fill you in on a few interesting stocks. 10 and 10 to 1, our first stock will be Sierra Wireless, SWIR, if you want to go take a look at that. And then we will finish it up with the decision point report. I'll let you know what Carl was thinking over the week and what to expect in the coming week. So let's get started, Tom. Headlines and news. What's out there?
All right. Well, actually, we didn't have a whole lot going on. So kind of the Treasury market's kind of left to do whatever it wants to do. There was no real significant earnings reports out, no economic reports. And so, we're just kind of sitting. I'm not shocked that we're down 1 basis point today after the big move we saw back on Friday. Now, I do have a longer term chart up here of the 10-year Treasury yield. And keep in mind that the stock market, after making that huge move back in October of 2016 and rising, I've said that it's always a good thing for the equity markets when the 10-year Treasury yield is rising. And I think from this longer term chart, you can get a sense of that. Even though we did have periods of consolidation, the overall move to the upside means money's coming out of treasuries. And when that happens, it's typically because of a strengthening economy. And that tends to lead to not only higher interest rates, but also a higher stock market, because better economic strength leads to more profits for S&P 500 companies, and the multiples go up, and there you have it. So I think it is a good thing that we continue to move higher. 10-year Treasury yield, if we look at it and say, well, yeah, but it's gone up so much. Well, let's take maybe a little bit longer approach. Let's look at the 15-year monthly chart. And I think what you'll see is that we're still pretty darn close to these all-time lows that we saw back in 2012 and 2016. And if we go back even further than the 15 years, we could go, double that, go back the last 3 decades. And you'll see that our interest rates still are very, very low. So if we've got to strengthen the economy, we should be able to handle interest rates at this level. Now, if we start getting up 4.5%, 5% somewhere down the road, personally, I think that's where it could become more of a problem. But I think we're a ways away from that. So I'm still looking for a pretty bullish behavior in the U.S. equity markets. And I talked about that a little bit last week. But let's take a look at industrials, because I do think industrials are beginning to pick up some strength. We saw the low here back in July, and you might look across here and say, well, it's just been flat. Well, it has been flat, but if we go back again much further, and I'm going to go out throughout this entire bull market, which is roughly 10 years, you can see that we have this tendency to move up. Industrials outperform, then we go sideways for a while, then we outperform, we go sideways, we outperform. And I think we've been in this period after outperforming for 2 years from that late November or late 2015 low, and especially the late 2016 low, that huge move that we saw up in the industrials on a relative basis. All we did really is come back down and consolidate and hit relative support. And now we seem to be turning back up again. So if we just look at what we've been doing here as we start to turn back up, I think that this could be the start of something much more significant. Now, there are a couple levels that I would watch on a relative basis. This is a chart of the XLI versus the S&P 500. So it's not telling us what the XLI is doing. It's telling us what the XLI is doing relative to the S&P 500. So throughout much of 2018, we've seen a pullback. Industrials have not been a leader in 2018, even though we are starting to see some leadership again. That has not been the case throughout the first almost 9 months of 2018. But this short-term downtrend is a series of relative lows and relative highs, lower relative lows, lower relative highs. So the first key level of relative resistance that I would be watching is about this 0.0273 area right in here where we topped in July, because since then we've gone down, we've put in that higher relative low. So that would, at least in the short term, start to look much better for the industrials. So that would be one thing that I would watch for pretty closely here. I think the bigger level, though, is probably up at this level, because as you go down, this was a low, here was the bounce, this was a low, here was a bounce. Until we actually get up to this level, we still have this series of lower lows and lower highs in play. So the first step is to get past that 0.0273 level, but ultimately I think it's 0.0279, and that'd be something that I would keep an eye on. Now, within the industrials, there have been some very strong areas that are helping to lead, one of which is railroads. Now I'm going to do a chart of the industry groups relative to the XLI to see which areas of industrials. If we continue to see industrial strengthen, we want to know where the money is rotating within the industrial group. So that's why I'm going to pull up some of these individual charts, and you can see throughout this year, even though industrials have not done very well on a relative basis, the money that has gone into industrials, you can see railroads are certainly getting more than their fair share, as they have been climbing for the past 6 months relative to the XLI. We can go in. I'm just going to adjust and show you a couple of others here. You've got the waste and disposal services. Look over the last 3 or 4 months. On a relative basis, this group is seeing money rotate in relative to other areas within the industrials. Then you've got, let's take a look at DS, which is the industrial suppliers. And you can see a beautiful move up throughout the last year. We've pulled back, but in the past, anytime we've gotten any of these relative pullbacks, it's been opportunity for entry into the group. I'm going to pull this group up in just a minute and show you how you can maybe look at some of those. The DJUSFE, which is the industrial machinery group, had been downtrending throughout 2018, but looks like it's put in a pretty good double bottom here and is now beginning to outperform. So this is one that maybe has reversed and is starting to strengthen. This is one definitely to keep an eye on to see if that relative strength continues, because if we do ultimately get renewed leadership from industrials and we see relative strength continuing here in industrial machineries, then a lot of those companies obviously would benefit. Last one I'm going to show you here is the truckers. This is the Dow Jones US Trucking Index, and you can see the big breakout here on a relative basis over recent highs. Still got a little bit of work to go, but this is the one where if we take a look at the group on an absolute basis, you can see the huge breakout that we've made. I'm going to go back and lengthen this another year. So we're going to go back 18 months here. But do you see all the sideways consolidation throughout 2018? We've now made a breakout. So I think truckers are an area to absolutely keep an eye on. I expect that they're going to go higher. We'll pull back. We'll test support. And that'll be the time to be taking a look at some of the truckers. So what do you do with this information if you think that there are a couple of areas of the market? Well, if you go into that scooter report, depending on whether or not you want small caps, large caps, whatever, if you go into the large cap stocks and we put in trucking, you'll see that there are two stocks in the large cap. You can go over, you look at this sideways consolidation on CHRW in a recent breakout. JBHT, a little lower scooter, only at 63. Here you can see the scooters for these stocks, but CH Robinson looks like a pretty interesting candidate. So here was your sideways consolidation. Look at that false breakout above this top over here. We go back, we hit the 20-day moving average, and now looks like we're getting the breakout. I'd like to see a little bit more volume come in this afternoon. But that's one way to take a look at perhaps looking at a large cap stock. Now, if you're more interested in the small caps, pull this up. Look at all the truckers, small caps. Look at these scooter ranks. You can quickly zero in on the stocks that have been performing best. So if money rotates into the truckers, these are stocks certainly to keep an eye on. Now, I would be going over here and looking at the volume. I can see the second one, PTSI. It's only traded 2,700 shares today. I would be looking, I mean, we're not even to the halfway point of the day. I think if you're close to 100,000 shares or more, then you're probably in pretty good shape. So ARC Best Corp ARCB would be one that I would consider. Beautiful flag pattern. Looks like maybe it's trying to make a breakout here. Huge move up. A close over 50 is what you're looking for. Stock went up and hit 50.07 earlier. So this is one that I would certainly be keeping on my radar. Scroll down. Here's the next one. This one's got a scooter at 67.5. And keep in mind, you know, truckers were going through a period for a while of sideways consolidation. So I wouldn't be expecting scooter ranks of 95 or 100, you know, up in that range. Some of these stocks, I think in the 60s, if the money begins to rotate, you may be looking at stocks that have been consolidating. That could be great opportunities. So let's take a look at SAIA. Well, it's struggled to get through 80, but it's doing it today. Volume, a little suspect for me, but overall, you know, especially for most individual traders, wouldn't be bad. Let's maybe take a look at one more trucker here. Let's take a look at Heartland. Actually, Werner. Let's see what the charts look like on both of these. Well, maybe Werner with that kind of volume coming in. Let's take a look at what's going on here. Well, a huge move today. Now, I don't know if that was earnings related, and then we pulled back, and we're going to talk about this some more in Earnings Spotlight in just a couple minutes. But if that was an earnings related gap up and we pulled back, I would be expecting actually a move back up to that 42.5 area. So this could be the start of a more significant move to the upside in Werner. I'm going to go ahead and cut it off there. I know, Erin, there's a few upgrades, downgrades today. What are those charts looking like?
Indeed. Let's look at a few of those. All right. So I'll start off with Akamai, since that is the top one here. All right. So Akamai was upgraded by D.A. Davidson from a neutral to a buy. You can see really nice move with the big gap up on that upgrade. You know, when I was looking at this chart, I would have to say I'm going to go ahead and annotate it just a little bit. One of the things I noticed is we got that PMO buy signal at the end of August. And granted, Price moved down a little bit here, but the PMO was rising at that same time. And that gave us the hint that there might be something good going on. And if you look at the rising bottoms trend line here, there we go. It didn't even have to go down to it to test it to make, to continue up higher. So, I like this. I think I would have been a little suspect of this, symmetrical triangle that had formed here. But ultimately, seeing that buy signal so early and now getting that breakout, I think it was a really good setup there. Unfortunately, I didn't see it back then. But yes, a nice big gap up over 3.4% right now for Akamai. Let's look at SS&C, which is SS&C Technologies. And this one was upgraded by Deutsche Bank from a neutral to a buy. But at the same time, D.A. Davidson maintained a neutral on it. So I think this has, mixed reviews just coming out of the gate. And of course, my first notice was this PMO sell signal going on down here, and the PMO, it's still in decline, so we got the gap down here. We haven't quite filled it. I'm looking for it to fill that gap, but what I'm looking at now that's very interesting on this, look at this rising bottoms trend line that's been intact, and honestly, I probably could, I could bring it back down to here, and we drop below that. So I would be very suspect of this particular upgrade, just based on the fact that, you've got a PMO sell signal in play and a drop below this very, at least intermediate to longer term rising bottoms trend line. So not the best looking upgrade that I've ever seen. I think we've seen some much better ones. But let's look at some of the downgrades right now. HTHT, we're going to look at Deutsche Bank, moved them from a buy to a hold. So it is a downgrade, but not a horrible downgrade. However, the chart looks horrible here. Just look at the broken support here. Very important area of support. You had it setting up quite 3 times where we had the touches of this support line, and now we've dropped below it in a big way. Of course, we do have more support down here at that low that we had at the end of November. But look at the sell signal is below the 0 line. I just don't see anything very good here. On that downgrade, I mean, if you wanted to watch it, you could, but look at the 50-day EMA is just about ready to cross below the 200. This is moving into a bear market configuration. So I'll have to agree with that downgrade. I think you could have gone further than holding this. I suppose you could hold it to that, area of support down there, but why? So I don't think I would be holding this. And yeah, I'd leave that one alone. XRH, Texas Roadhouse, in that cyclicals group that's been doing quite well. We got the downgrade, though, however, on Texas Roadhouse from an outperform to a neutral. So while it is a downgrade, it's still it's sort of in that hold space where we saw the HTHT. So it's backing off toward that area of support. I'll go ahead and put that in there so you can see it more clearly. It's just about ready to come down and test that. Now, we had the buy signal come in mid-August, and again, came in at a good time. We had a lot of consolidation here after that buy signal, but that was really giving us some heads up when you could see that PMO rising despite consolidation as far as price. And we got the continuation, got that nice breakout. As far as a downgrade goes, it's a neutral. So they're telling you basically to hold on to it. I would say the same. You might have to suck up a little bit of loss here back to that support level. But, with that PMO buy signal in place, that actually might be a good time to get in. United Health Group. UNH was also downgraded today from a buy to a neutral. And you can see that it already has dropped below some short-term support right there at those lows we had earlier. Where's our next area of support? I'd be looking right about here where we had the top in July, and it acted as support back here mid-August. So I would be looking for a drop back there, but then come down here and look at that ugly PMO sell signal. Of course, it was dragged very quickly lower because of this move of 2.5% to the downside. So again, maybe on a watch list. It's got the rising bottoms trend line. We'll have to see if it could hold this right here. But you can see it's already trying to break below it and trade below it. So I think this downgrade, I don't know that it's going to offer us anything in the future at this point. Those were the downgrades I had. So let's go ahead and get a look at what we, let's see. Let's get ready for Monday setups. What am I thinking? Last week, how did we do? Well, first of all, what did we have? I had CYRX at 1409, and I happen to know I did very well. We're going to have to look at that chart. How'd you do with Google, though, Tom?
Not good. It was not a good week, and I went against my, normally I have my setup in my blog article, which I'm not sure which one it was. AIZ, I think, is the one I had last week. But anyway, I ended up picking Google because AIZ, I think, was already up a little bit, and Google was closer to support. But Google broke down, and of course, the internet stocks got hammered last week, so that was not helpful. But yeah, you definitely got me this week.
Yep, there you go. We hadn't gotten I think we had just gotten the buy signal, but you could see that rising PMO despite the fact we were consolidating. So another setup like that. Yeah, it's currently reading at 14.59. So I got a 50-cent gain on that. That's pretty tidy sum.
Especially given the market. Market wasn't all that great.
No, but I have to say it really wasn't looking so good until Friday. So, I mean, I'm not going to pat myself on the back too much there, but a nice day today, it looks like, although a tail up there to the top, I don't know. We'll have to see how that comes together. But let's see, Google.
Yeah, actually, this was a double whammy for me because I actually traded it.
Oh, no.
Yeah, I got stopped out because I got in. But yeah, it was that area of support. You could see all those tops around 1,200 going back last several months, and it went back below the 1,200 level and continued to trade down below its short-term moving averages. So I still love Google going forward. I think it's a great company, obviously, and it's in a good space, but the space itself is really struggling right now. So I think on a relative basis, Google continues to hang. I don't know if you have my relative chart. I think this will be a pretty good example of what's going on with Google. It's not so much what's going on with Google as it is what's going on with the internets. So if you go down below, you can see Google hanging in relative to its group. Yeah, where you just circled up there.
Here.
Yep, right there. So Google continues to perform very well relative to the internet. But when you look at the internet's down at the bottom relative to the S&P, that's the problem. So companies like Facebook and Twitter and Snap are taking really good companies like Google down with them.
Yep, indeed. All right. Well, I have to say, if I had Google, I don't think I'd be even holding it at this point, just because that PMO is looking so ugly, and 20-50-day EMA negative crossover on board. But there you are. What are we looking at now?
I was just going to say, I would expect Google's going to turn around, and a lot of times you will get those. I know when you look at the PMO, it's very similar to the MACD and the PPO, and that a lot of times you get the center line, and many times they'll turn up off of that when it's an uptrending stock. But I think the most important thing for Google is just simply whether or not the selling in the internet stocks begins to slow, because if it doesn't, it's a case of the baby being thrown out with the bathwater again. Indeed.
All right, well, let's look at what we have this time. So I'm going to look at 5. One of them I picked. This particular one, Duke Realty. Now, I ran a couple of different scans, so I really can't point to one versus the other as to where I came up with some of these. But suffice it to say, I was using my PMO, obviously, and I do like to look for a decent setup as far as the trend models. But this one, you've got a 520-day EMA crossover. You can see it in the thumbnail there. You have the 20 turning up before it crossed below the 50. And now we've got a PMO buy signal. Look at that move on the OBV, despite price tops moving down at that point in time. Those tops on OBV were still moving up. So I think there's still a good setup here. The scooter is starting to rise. This is sort of the point, the sticking point for me, though, by not choosing this was this declining tops trend line, and we're testing it right now. And I don't have a crystal ball. And despite a really good setup here for the PMO, I opted not to pick this for my Monday setup. But I think there are a few things that point to this being a decent one. And that would be this double bottom in the short term, forming off of this decline from the top in earlier August. So I think this one's still set up nicely. I have put it in the Monday setups. Fiesta Restaurant Group. This is a very, I think this one was one of the lower volume ones that I ended up with. But we have a PMO buy signal now happening. It hadn't happened yet. And again, look at the move on the PMO, still moving nice and straight, even though we had some sideways trading going on here. That tells you that there's still some momentum inside here, some internal strength. The reason I didn't pick it was simply that the OBV tops were sort of in decline here as we came through with these rising tops. I mean, it wasn't like a huge, oh, I don't like this. Obviously not. I picked this as a Monday setup. I think you could even make a case for another double bottom here with the break above it, and currently trading above that area of previous resistance. So I think that is looking fairly good as well for Fiesta Restaurant Group. General Finance Corp was another one that came up for me. This one has a really nice breakout today, and that's one of the reasons I did not select it as a Monday setup, but I think this one is really looks really interesting, as we like to say. Look at the OBV bottoms. They went into decline here, but price bottoms were moving up. That's a good sign of internal strength. That would be considered a reverse divergence, which is a positive setup. And then we've got the PMO buy signal coming in on this breakout move. You know, if you look back at what happened on Friday, it closed on this overhead resistance. Certainly the best time to get in. I'd be watching this one for a pullback. The only reason I did not select it, like I said, for Monday setups is I have only 1 week for my stock to do well. So I opted not to select this one, but I think of my Monday setups, this one looks pretty good for a bit of a longer term trade, more toward the intermediate term. This is Sunoco Products, and I like this one for similar reasons to the last one we looked at. Look at the rising bottoms on the OBV with rising bottoms right here. And, you know, the tops were mostly sideways, which isn't the best thing to see when you have the rising tops. But we got the breakout on those tops with the OBV. Right at the same time, of course, we have the PMO turning up and giving us a buy signal right now. This one could pull back a little bit more, but, you know, we're only looking at a 0.25% rise right now. So I think this one still might look good for a short-term trade. But here is my pick very quickly here. And it is breaking out. It is up about 0.5%, but it is trading its price right now. The last price is above that $75 mark. Let's see. Oh, I said I was in at 75.09, but right now it's at 75.02. So I'll take that extra 7 cents for our move. I did the Elder 1.5 ATRs to come up with the stop. 1.5 ATRs at the time from where we were, average true range 1.5, was down at 73.59. So that's where I set the stop for this one. And of course, my target, it's sitting at an all-time high. So I would be looking for a move about the size of this previous trading range here. So I figured from 73 to 75. So I'd look for a $2 rise. So I'm looking for a $77 move. Up to 77. So we'll have to see. But look at nice, pretty PMO, not too overbought. Everything else looks pretty well set up. So RSG for me.
All right, sounds good. I'm going to show you on the relative strength chart that I have your RSG. That is in the waste and disposal services group that I was talking about earlier with the industrial. So that's very good space right now. As you can see, the stocks in that group doing very well, and RSG also doing well. So good pick. I like it.
All right.
Okay, let's see. All right, if you go into the blog articles, I'll show you how you can always get to my Monday setups. And that is if you go into my Trading Places blogs or blog, you'll see my live chart list, and that's where I keep them. So I think there were 5 or 6 stocks. But anyway, I'll go through them. This is the first one. This is the one I featured in my article. I would have gone with it, but the stock's already up over 6% today. I can't do it. I'm probably going to be kicking myself because I do like the stock. I think it goes higher, but I can't. Looking at it from a reward to risk standpoint, I'm not going to be able to look. Not going to be able to go in at this point. And I don't own it at this point, which really stinks. But it is what it is. Next up is DNOW, Now Inc. This is another one that has pulled back. Here was your earnings related push to the upside. We've come all the way back down into this support area. We've tried to move up a little bit today. I think 15 to 15 and a half is an area that I would be looking at on Now Inc. Let's move on. HLX. This is Helix Energy Solutions Group. Really nice move and reversal, closing near the high on Friday after going down below gap support and below the prior low from a few weeks ago. Nice reversal. Starting to see some more pickup in action to the upside. So I think this one goes higher, but it is bouncing already. ITT, love the candle from Friday. It came down to at least the top side of where I'd be looking for support. You do have gap support down to 56 and a quarter or so, but another pullback into that 56 and a half, 57 area, I think would be very tempting from a reward to risk perspective. On Deck Capital, ONDK, I do own this one. I like this stock down here. Anywhere about $7.95, $8, I think is pretty good support. It did get as low as $7.96 today, or $7.95, whatever that is. But the stock was up to almost $9.50 a few weeks ago, right after their earnings report. Now it's pulled back quite a bit, and I think this is a good area from a reward to risk standpoint to get in. OTEX, this is Open Text, another one that went up, tried to get back through the post earnings resistance area, couldn't quite do it. It's come all the way back down. This has been an area of really good support on OTEX. There is gap support down to about 38, or actually no, it's about 37.60. So that would be something to keep in mind. Maybe a couple of entry points would be worthwhile here, but OTEX, I'd be looking for a target eventually 39.5 to 40 to retest that recent high. And then the last one I have is WOW. You got to like the ticker symbol. Wide Open West. WOW, WOW. Huge gap up and big move up with earnings. Stock went from below $11 up to about $12.60, $12.70 with its earnings report. After 3 weeks, pulled all the way back. It's hit that gap support area trying to bounce, but I like it again down closer to $11, maybe just a tad below. And so those were the ones I had. I am actually going to go with the stock where I've got my money in, which is on deck, ONDK. Didn't work out so well last week going with Google, which was a stock I owned, but hopefully this one works out a little bit better. I love the fact that it is back at this area where the buyers have consistently been buying $7.90 to $8. I like the fact that we're working our way back down close to that PPO center line. And of course, the RSI is dipped down into the 40s, which is exactly where I like to look for these stocks. I like uptrending stocks with RSIs in the 40s. So I'm going to go with ONDK, and the price is $8.06. We shall see what happens this week. And there are your Monday setups.
Yes. Excellent.
Yeah, and I do want to just remind everybody, if you want to see these, a lot of times I'll post these in my blog either on Sunday night or early in the morning, normally when I'm working on my blog. So generally around 9 or a little after 9 in the morning. So before the stock market opens, a lot of times this will be updated, and you can go in and you can check out. Again, all you have to do is go into blog articles, go into Trading Places blog, and then right here, you can click on that live chart list, and that will bring up. And I actually still have the ones in from the past few weeks, so you can go back and take a look at some of those, which are still, I think, in pretty good formations. You can see there's CMG, which is Chipotle, starting to bounce off support. So there could be some other ideas looking back a few weeks as well.
Absolutely. Nope, that looks pretty good. We'll have to see how we fare next week. And if you want to see what our setups were, you can always go to the Market Watchers Live blog, because this chart, as well as the one we saw earlier, will be up. And so you can go and look up the symbols we had, etc. So
Yep.
always a good place to go.
Absolutely. So let's move on. We've got earnings spotlight up next. And what I wanted to do today is I'm going to go through a bunch of charts. And the first one that I'm going to go through is Actuant Corp. So let's take a look here. And you will see ATU. Now, notice I'm going to go a little further on these charts. I don't think 6 months a lot of times gives you enough of a view of what's taking place on the chart. But here you can see ATU. Look at the price breakout above December, which was at about 27.50. Look at the volume coming through with earnings as it takes out that prior level of resistance. Notice it pulls back and hits this level. So part of my trading strategy, and I'll talk a lot more about this tomorrow in the workshop, but part of my trading strategy is not to chase. I don't know exactly whether or not this is going to be a breakout or if it's going to be a failed breakout. So if I'm chasing intraday, it's just difficult to set my reward to risk up so that it makes sense. But when a stock comes back down and hits a key area of support, whether it be the 20-day moving average, price support, maybe a 50-day, maybe the bottom of gap support, one of those things, a lot of times that's where you'll get these rebounds. And you can see ATU, after moving higher, pulls back and then starts to take back off again. It's worked its way all the way back to 30, which is where it was after earnings. But hopefully you'll agree 27.5 is a better entry than 30 when you have a stock 6, 8, 9 weeks later that's still at 30. Chasing would have been very frustrating to hold this long just to be back to even at this point. So when I see these stocks come out with their strong earnings, I put them on my strong earnings chart list and I wait. And I wait until one of my scans picks it up, or maybe I'm just looking through the folder and I happen to see some stocks that look really good. Now I'm going to give you a bunch of others here that have done very similar in that they go up right after earnings and then they come back and give you opportunities to enter lower. So here's Kroger. June gap up, big earnings report, nice move up. Look where we come back down to the 20-day moving average. And by the way, after we gap up above 28 back in June here, we pull back intraday to about 27.5. And notice that's right where all the buyers come back in again later. So if you're getting in around this area, you can manage your risk to the downside while looking to capture this move back up to the upside. Now, you could have held my strategy a lot of times to get in near support and sell at resistance and then just kind of rinse and repeat. If I see a stock making a big move up to resistance and I really like the volume, I might sell half. I might hold it and see if I can get through. But a lot of times I will just take the profits when it gets back up there, and I'll point some of those out here in just a minute. CarMax, KMX, big gap up with earnings. Look at this. And 4 or 5 days later, it drops from 82 all the way back down to 72 and puts in a reversing candle right at the 20-day moving average. So, and then you've got gap support down here at about 71 with, being able to keep a fairly tight stop in that 71, 72, 73 area. When you've got a target up near 80 or 82, the reward to risk really makes sense. PRGS. Now, this is one that has not been performing very well, but off of this downtrend, look at that volume come in. It looks almost to me like a change of character. But after gapping up, look what happened over the next month. Had an opportunity to get right back in at the low of this candle, 36.5, 37. Never went down below the bottom of gap support, and then came all the way back up to 41. So if you wait, you get it at 36 and change, 37, you've got more than a 10% winner in less than a month, and your support level holds to the downside. Next up, ACN. This is Accenture, and here is your big move up with earnings in June. Kept going higher. Again, I'm not going to chase. I'm not interested. But after it had 3 or 4 days, look, it comes right back down into this gap support zone. And look where the RSI bottoms out, right around 40. So that's going to be something that would get my attention when it starts doing this, pulling back. Because, some will look at it and say, well, it's moving lower and the volume's picking up. Well, a lot of the reason is everybody getting in at the top starts panicking when they see the stock moving down. That's why the volume is going to pick up. Those that were chasing get scared out of the stock and the volume starts to pick up as panic sets in. But notice the uptrend remains in play. We don't lose major support, and we end up turning right back up and going back to where we were before. So ACN, I think, was a good example. Nike, big gap up end of June, pulls back. There's your 20-day test. Here was your prior price resistance at about 75 and change. Notice we put in a reversing candle right at 75. So again, chase over 80, or you can buy back at 75, 76 with much less risk to the downside and more upside potential. Helen of Troy, HELE. Look at the gap up here, sideways consolidation. Here was that initial move down to of selling, and then the buyers picked back up. And notice we went right back down to that level around 110 before we made a big move here. CBSH, this is Commerce Bank shares. Big gap up with earnings, went all the way back down, filled the gap in this case before turning higher. ABT, big gap up. Here was your earnings related move. Nice gap up, heavy volume, went back down, hit gap support. Notice also it comes down here again later. So when it comes back down, look at the RSI here dropping into the 40s. This would have been picked up on that RSI 40 to 50 scan that I like to run. And then 5, 6, 7 days later, a quick move from 63 up to almost 66. Do they all work? No. Here's an example of one that didn't work. ASML. So here's your gap up with earnings. We pull back. Looks like it's trying to hold on to gap support and then falls apart. So very similar to what I was looking at with Google. You got to keep your stops in play. If it doesn't work, you get out. They're not all going to work, that's for sure. But the idea is to try to keep your downside to a minimum while you're looking for very quick rewards back to the upside. So let's take a look at some other stocks here now that I think look very interesting. These are companies that have reported over the last, maybe 3 weeks or so. And these look pretty good to me. I'm just waiting on them. So HEI, Heiko. Look at the big gap up here, and there's a tail coming down. So I know my support's around 85.5 to 87.5 in this zone. Volume is huge. It's continuing to go up. Volume's declining, though, so it's probably getting closer and closer to a reversal. And at some point, it'll probably come back to me in that range, and then I'll be interested. DSW. Gaps up, black candle, starting to move lower. There is a little bit of support here at about 31.60 or so. So DSW could make a turn back up. But the problem is if I go with this tail, I'm going to have to use an intraday stop because I don't want to go all the way down to the 20-day moving average. I would probably wait and look for maybe a reversing candle on the 20-day, or even better yet would be a move back to test this area of the breakout around 29.25, 29.50 or so. PSEC, Prospect Capital. Beautiful move up here. This was no gap. Well, maybe a little bit of a gap, but the big move up. Check out the volume coming in, starting to pull back. Anything down around 720 to about 705, I think is a really good range on PSEC, because if you get it down around 705, it could easily come back up to the 760 level. It's almost a 10% gain. So again, I'm going to show patience here. SCVL. By the way, every one of these companies I'm pulling up right now beat Wall Street's estimates in terms of revenues and earnings in their last quarter. They didn't necessarily all raise guidance, but if the stock continues to look good technically, even if they lower guidance, sometimes I think the stock hangs in there because Wall Street trusts these companies. Even though they may have lowered guidance, the fact that they just beat top and bottom line lets them know that that adjustment that they're making is probably a good number. So I would be, I'm less concerned about a company that beats on its recent quarterly results and then lowers future guidance. I actually feel better about a company that does that than a company that misses top and bottom line and then raises guidance, because I don't know if I can trust that raised guidance when you couldn't even beat the last quarter. So anyway, just my own personal preference. Shoe Carnival, SCVL, you can see the gap up, very heavy volume. It's working its way down. Maybe it holds this 40 level. I'd be more comfortable as it gets down closer to the 20-day moving average. Tiffany's, TIF. Now, this is one that didn't break out after earnings, but it had such a huge move back in May. It ran from $102 to $140 in 2 months. So I think we're just in a long-term consolidation. So after beating again here, it gaps up, but it doesn't break out. And I think that kind of, I don't know, maybe turns some traders off of the stock for a bit, and especially as it starts moving to lower lows. But I think as we get down, if we get below 120, I'll be buying Tiffany's. I like the stock. The fact that it's beaten out the last 2 quarters, I think if we pull back into that zone, I would be very tempted to be a buyer. SMTC, Semtech. Beautiful move up. Huge volume. Again, waiting, just waiting. TLYS, Tilly's. Beautiful move up. Now, this one, I actually would have had my setups, but when I ran my scan, I ran it for RSI 40 to 50. Look at the RSI here. It didn't quite go below 50, so it didn't get picked up on my scan. But after a huge move up, it sold off. Some might say, well, yeah, but look at the volume on the selling. It's much bigger. Well, it's much bigger, but anybody buying at 25 is pretty darn panicked by the time we get down to 20. So I think that's why we got a lot of selling. If we can get down to 118 or close to 118, and we're almost there, I think or 18, not 118. But even at the current price, I really like the reward to risk on Tilly's. This is one I'll be watching pretty closely later today, probably. Sienna, gap up. Again, waiting to see if we can get a pullback. Some won't. Some will just keep going, and that's fine. I don't need to there's nothing in this list that I have to buy. I'll just wait and see if I can get it at my price. AVAV, gap up, big volume, continuing to go higher. I'm going to wait. Cloudera, CLDR. Look at that beautiful move. I think change of character here. Pulling back, but I think anything down around 1630, 1640 starts to get very interesting on CLDR. And then just to give you a couple of stocks that I recently have traded, just showing you what I look for. CLF, big move up. Look at the pullback here. And as it pulled back, we got all the way back down to that 950 area. I think I even talked about this one last week on the air, maybe 2 weeks ago. Look at the RSI down in the 40s, hitting a key area of support. I actually only took it up for a period of time. I'm trying to remember where I just got it. It might have been that 2 days ago, which would have been Thursday of last week, on the failed breakout above that 1070. It's continued going higher, but that's fine. It did exactly what I wanted it to do. HT, actually it's HTZ. Hertz, I actually sold today. Here was the pullback. Look at it right at the top of gap support. Came all the way back down, got a nice hammer just earlier last week. I think it may have been Monday of last week or maybe Tuesday. Or actually it would have been Tuesday, right after Labor Day. Anyway, I didn't like today when it went above the 20-day and came back down below the 20. So I just took it. It could continue going back up to the 22 level. In a very short period of time, I was up almost 10% on the stock, and I wasn't going to take any chances. Sierra Wireless, I think this one was picked for the 10 in 10. But here, look at this gap up, and here's that tail I was talking about, where the selling, all of a sudden buyers come back in. Well, when we go back down there, that's where the buyers come in. Look at this move to the upside. I actually sold Sierra when it got close to 1950. So it may continue moving higher. You've got some pretty important overhead resistance at 20. And then let's look at maybe one more. CTRL, Control 4 Corp. This one came down, tested the 20. I may have talked about this one last week, but I only looked for it to get back up here to the bottom of gap resistance, which was at about 35 and change. It's actually trying to go through that today and making a move back toward 37. So huge run up here on CTRL. Okay, I wanted to go ahead, and I think you know my trading strategy at this point. I'm much more of a growth person, looking for momentum. Here are the stocks we just looked at on the earnings spotlight. But then I want to go through and maybe pull up that poll and see what everybody's style is. Are you more geared toward value stocks? Are you looking for the stocks that are in downtrends to feel better about a stock being lower priced? Or are you somebody who really wants to go with the momentum and the growth? And so it looks like 50% are growth, 16 are value, 34% are other. I'm of the opinion you're one or the other, or maybe you're both. Maybe that's it. Maybe you like maybe your long-term portfolio is more of a value investor, and short-term you do growth. I'm not sure what the other category is, but it's good to know, I guess, based on what I'm doing, that 50% are growth. Hopefully you appreciate some of the things that I go over from time to time. But this was kind of a sneak preview of more of what I'll be talking about tomorrow when I look at my strong earnings chart list. and you definitely want to tune it in. Tune in to it because I do have a big surprise for everybody. So with that, is the end. Where do you fit here, Erin? I know you do the value investing thing, I think, a little bit with your long term portfolio.
Yes. Yes, I think I'm a mix of both, really, when you put it down there. But I actually answered this with growth in
Oh,
general
okay.
because, yeah, my time horizon would usually leave you to a value, but I think because of the way I trade, what I look for on the chart, I think I'm more of a growth trader. So
Yeah, I
just
think,
depends on your time frame, whatever my account time frame is, because I have so many different accounts with different criterion.
yeah, I think too. I mean, you can be long term investor and be a growth investor. There's a lot of companies that are strong growth companies that go on and on and on. So really, I guess more value investing would be those who are trying to uncover or unlock value that they don't believe the rest of the market sees. Maybe really low PE ratio stocks or price to book, price to cash flow, that sort of thing, where you're looking to uncover that value over time. So um, I don't know if the value investors probably tune me down. They probably tune me out when I start talking because I'm not much of a value investor. I tend to look for stocks that are on the move and rising, many times with high PEs, and
Right, right.
that may not line up with a lot of folks, which is fine. Everybody's different.
Exactly. All right, well, let's see what we got for the 10 and 10 here.
All right. What do we got?
All right. So I pulled up the RRG. Let me clean it up a little bit here. There we go. And we'll fit it on here. This is the weekly version. I promised a few people I would do that for a little while. I'm going to come right in here a little bit more, though, because we had a couple outliers. I thought AMD looked really interesting. PSTG is a possibility. So, as far as RRG, I usually write down which ones look interesting, and then I go through and I try and pick some different sectors. What's our sector looking like today? Sector picture. Technology, certainly the most interesting. And then it looks like it's followed by industrials and healthcare. So that's what we see on the RRG. Let's go ahead and get started, though. Sierra Wireless. And yes, you did talk about that just a little bit earlier, but let's get it in our 10 and 10 chart list.
All right, let's go ahead and talk about Sierra Wireless a little bit more. Here's a couple of things that you need to keep in mind with Sierra Wireless. First of all, you're in a good group. So you can see the telecommunications equipment group doing extremely well, made a huge run during the month of August. It was down around 1160, ran up to 1300 in 4 weeks, 4.5 weeks, something like that. So that's pretty important because if you got a group that's on the rise, then if you got a stock within that group, you got a much better chance. Now, while it was moving up and consolidating earlier in 2018, you can see that Sierra Wireless was actually downtrending and consolidating. But I think I may have mentioned this last week. And what looks like could be taking place is a change in character with Sierra Wireless beginning to outperform a very strong group. Now, we did get the breakout. We pulled back, and anytime after earnings you get that pullback, you're probably going to see a little bit more of relative weakness, which is fine as long as I don't lose my price support area. In this case, Sierra Wireless held. I think we're in a trading range between about 18 and 20. And so as you get closer to 20, I'd be a seller. And again, keep in mind that you are in a long-term downtrend relative to the index, relative to its peers. So don't just assume that everything's perfect and we're just going to go right through. I've seen some crazy stuff in the market before. Big volume, gap up, and next thing you know, somebody comes out, downgrades it or whatever, and it's back down into that relative weakness that it was mired in for many months. So if I get an opportunity to take my profits, I do it and move back to the sidelines and wait for a better reward to risk entry. So I like Sierra Wireless here so long as it holds $18. But I do view it as being in a $2 trading range, and you're near the upper end of it right now. I expect it to break out, but I'm not going to buy it and hope that it breaks out. I need to see that first.
All right. Let's see. Most popular in the chat room. Actually, I have a three-way tie, but I'm going to pick, since we let's see, we looked at it recently, so I'm going to go ahead and let us do Apple because that is one of the most popular, and we wouldn't look at it otherwise. And we'll probably look at the other two, so don't worry out there.
Yeah, Apple, I think looks good here. I like it on the 20-day test. I think I was talking about this one recently as well. But as it was moving up, great volume trends. The PPO looks great on the most recent high. That's telling us the momentum is building. So I use pullbacks to the rising 20-day moving average as support. I would be a buyer if it closes below the 20-day. Probably you could probably keep a tight stop, fairly tight stop, 1%. I mean, if it goes down more than a couple bucks here, then I'd be looking maybe for the recent breakout, which was above 208 or so. Maybe we get another push down to that level. But initially, my thought is it will bounce off the 20-day. So I like Apple.
Okay. Let's see, next one I have up for you is Pure Storage. It's computer hardware, PSTG.
Yeah, this is a really nice looking chart. It's been moving up. This is one that's on my strong earnings chart list. There's just no opportunity yet from a reward to risk to get in. So I haven't traded it, but I love the stock. I think there are a couple levels to watch. First is going to be this area down here is going to be pretty critical support, perhaps somewhere down the road. In the meantime, I think the first time we drop and hit that 20-day moving average, we're likely to bounce. So I think it's a good stock, great volume trends, super earnings, but I just don't like to chase. So I'm going to hold off for now and maybe think about entering this one on weakness somewhere down the road.
Okay, let's see. Next one for you is an industrial, United Rentals, URI.
Yeah, industrials are definitely picking up, and this is one that's trying to make a breakout of a downtrend. So it's certainly one to keep an eye on. I don't know that I wouldn't be a buyer right this second. I do like the volume coming in, but I want to get that confirmed close. If we leave a tail up here, especially if we get up to 162 or something this afternoon above these prior highs and then come back down and close below, we could be in for just more consolidation. But if we get a breakout above 160, I would view that pretty bullishly. So this is one that I would keep in mind or keep on a list. And I really like the volume. We're only halfway through the trading day and we're already over 1 million shares. So the breakout would be confirmed if we get it today.
Okay. Let's see, next one will be International Paper Materials, IP.
Yeah, it's still waiting for something here. It's just sideways consolidating off of a downtrend. And right about there, you can see is pretty significant resistance, 53 and a quarter or so. And then you come down to support. You could draw a couple lines here, but there's your intraday support going back the past few months. Here's the candle body support. So let's call it 50 to 50, 75 or so. Pretty good support on IP, and then 53 and a quarters resistance. We're sitting almost right in the middle at 52. I see nothing here to do with International Paper.
Okay. Let's see the next one. Let's look at Turtle Beach Corporation, HEAR.
Yeah, this one is on my strong earnings list, and it was starting to pick up again last week. Actually, it's still going up another 3.7% today. Yeah, it's got to get through the moving averages. I'm going to shorten the time frame here so we can get a little bit better picture of what's going on in the daily candles and all. But great volume trends longer term. There's a pretty big reversing candle, two of them back to back. We did come down below these recent lows, but if we can get back through, and this is a little bit of a head and shoulder breakdown, although I would have wanted to see a whole lot heavier volume to really convince me that this was a topping pattern. But we should respect that $25 resistance area until we can break through. So if I was in recently and I had a 10% profit, I would be taking it. This push to the upsides on lighter volume. We could go back down one more time. But for now, I think 22 to 25 is a near-term trading range on here.
Okay. The next one, you may have heard of it, AMD.
Yeah, this one is pretty crazy. It's been all over the place. Pulled back for a couple of days, and I know earlier today it was back up again. Doesn't seem to want to quit. Yeah, it just keeps going. The PPO continues to strengthen. There's just not been much of a pullback here. I'm going to stick with this 3-month chart, but what I don't argue with is heavy volume and price action that is moving higher. And I don't know how you can argue with anything that's taking place here. If I was in it, I'd just continue holding it. If I'm not in it, I'd need a pullback, maybe a 20-day test or something. But AMD looks really good. This is the best stock, or certainly one of the best stocks in the semiconductor space.
All right. How about Berkshire Hathaway? We haven't looked at that one. BRK/B.
All right. BRK. Oops. All right. Berkshire. Well, today's candle, I don't like it off this uptrend if it sticks. Of course, we could finish at the high of the day and then we'd be fine. But short term, you do have an RSI at 73. I rarely would be a buyer with an RSI at that level. Again, how do you manage your risk as a short term trader if you buy a stock that's been up 5 days in a row? Really hard to do. So I like the stock. I think it looks really good. I just need to see a pullback. And for me, the pullback would probably be this rising 20-day moving average or the level of the most recent breakout, which is probably around 211, 211 and a half. So those are the two areas on a pullback that I would be interested in.
All right. Next one up is Cloudera, CLDR.
Right. That one I talked about just a few minutes ago, but I think that I'm going to stretch the chart out again here. Gap support to me is going to be the big level because this was almost a Maribozu type of a candle that formed with earnings. And for those who are not candlestick fans, that means you gap up and you open very close to the low of the day and you close very close to the high of the day. So it just gives you this sense of just significant demand for the stock. And so if I have that many buyers coming in at the open and market makers can't get control of the stock to take it lower, then probably when the stock gets back down to this level at 16 and a quarter, you're going to see buyers coming in. So it got down as low as 1660 earlier and bounced. It could go a little bit lower. I would really like it, though, at about 16 and a quarter. That's what I'd be watching for.
All righty. Last one, MYL. I think you know that one.
Hi, Lan.
Yes.
Yeah, this is kind of a strange one. I don't know if that's earnings related with that huge movement, but if it is, then I think we're still in this very wide range. So there was the top with that big volume. Look at how that particular day's candle on massive volume has continued to hold the stock. It held it back at resistance, and we bounced where we would have expected to bounce based on where support was back in May. So this is the trading range for me on my land right now. 35 to the downside, about 39.60 or so to the upside. We've pulled back the last few days, and this is why I like to sell at resistance. You think you're going to go through, and then you just turn back around and start heading lower again. But I'm not a big fan. Sideways consolidation for quite a while here. I think you're in a trading range. I don't see a whole lot of upside right now, so I'm going to pass.
All right. And that would be 10 in 10. And here are your symbols that Tom just went over. I'll have those up in the Market Watchers live chart list at the end of the show. All right, so let's go ahead. It's time for our final market update. So let me go ahead and get that started for us. Candle glance charts look very interesting right now. You can see we had that rally pop in the morning for the Dow and most of the indexes. You can see the NASDAQ had that pop as well. But now we've been pulling back, and the Dow is now in negative territory. S&P 100, NASDAQ and S&P 500, as well as the mid caps and small caps, Russell 2000, have pulled back, but they are remaining in positive territory. TSX has pulled back and is now in negative territory. Treasury yields moving mostly sideways, but down slightly, 2.937%. You can see UUP, big gap down, but it is trying to make its way back up. And we've got gold had a move to the upside, not a very big one given what we saw on UUP. And it has started to pull back, but it is staying mostly unchanged right now. I think it is up slightly. It's 113.24 for GLD. You can see bonds had that really deep gap on the open on Friday and has moved mostly sideways. Today it's trying to make back a little bit of those losses, but really hasn't made much headway and is starting to move sideways once again. TLT reading at 119.42. USO is lower on the day, but again, we had another pop to the upside, just pulling back those gains and now trying to get back some of those losses that we just got during lunchtime for USO. And that completes our final market update. I'm going to pass back to you, Tom, while I get ready for my decision point report.
Okay, sounds good. Let me go ahead and pull up the Dow Jones U.S. Healthcare Provider Index. This is one group really getting hit hard today, and there are a couple things to point out. First of all, you can see higher prices recently on the Healthcare Providers Index, and look at the PPO rolling over. I did mention earlier today in my blog article that the XLV healthcare has been very strong, but it is beginning to look a little toppy. And so healthcare providers, I think you got to be a little careful with this group, as it looks like it may need some selling to unwind that negative divergence that we saw there. Within the space, you have United Health, which was getting hit pretty hard on a downgrade earlier. So big push back to the downside on UNH. That's hurting the healthcare providers group, and I believe we could see some additional weakness in this space. So I'll go ahead and turn it back over to you, Erin, for your decision point update. Take it away.
All right, let's do that. All right, so it's time for this week's decision point report. I'm going to go ahead and start on the member homepage. I want to show you what our current decision point signals are. And you can get your own tile with the decision point scoreboard. Just go over here to the drop-down menu and select DP signals. And we have a drop-down for the 4 that we keep track of. What I'd like to draw your attention to is that we got a new PMO sell signal on Friday for both the S&P 500 and the NASDAQ. Those came in, and of course, the day before that, we saw the PMO sell signal come in on the OEX. We had all green scoreboards for quite some time. I think we managed to let them last about a week, but we lost out at that point, only holding on to the all green scoreboards for a couple days to a week. Usually when you see something, we don't usually see all 4 scoreboards green. That's happened only one other time, and it lasted only a day. What it tells me, if I see all of those scoreboards completely green, is that the market is likely overextended and overbought and needs a little bit of a pullback. And sure enough, we've started to see a pullback, and that's bringing on these PMO sell signals. Currently, the Dow is all green, but let's go ahead and look at its daily chart to start things off. We have a PMO sell signal right now that is pending. So when the market closes, if at the end of the day the PMO is below its signal line, that will move the Dow chart scoreboard to not all green anymore. We'll see that PMO sell signal in that bottom left-hand corner. So let's go ahead and take a quick peek at the daily and weekly charts for those big 4 scoreboard indexes. We'll also cover the decision point indicators. I'll look briefly at mid caps and small caps, and then we'll cover the big 4 dollar, oil, bonds, gold. So let's get started here. All right, Dow moving mostly sideways. It did pull back a little bit on the beginning of last week, just a hair. And now we've seen mostly consolidation sideways. I've marked up a possible trading range right now. I think a trading range is generally a good thing. We are holding above this top back here in February for the Dow. I think that is a good thing. I would expect to see prices move mostly sideways. I don't think we're going to see a big pullback at this point, or certainly correction. Not yet. And I say not yet. I'll explain as we move forward. Weekly chart for the Dow. Not much here, but there's that important area of support that is holding. And we do have the PMO buy signal still on board for the Dow. We are seeing a little bit of deceleration here in the thumbnail for the weekly PMO, or the intermediate term PMO signal, but we're still on the rise. So I think that still leaves us some comfort as far as the intermediate term is concerned with some of these larger cap indexes. NASDAQ reached its 50-day EMA and is now moving sideways off of that. the PMO sell signal, there you go. That came in, like I said, on Friday. Look at the OBV, though, here for the NASDAQ 100. Not particularly good. We're seeing that decline in the volume, of course, with all these big red volume bars. So not a surprise to see it moving lower. What I will be concerned with after today is just seeing if we're going to get past these previous lows and tops here on the OBV, because that to me would spell a little bit more danger. At this point, if we get back down here, if we continue a pullback, I'd look for a pullback toward that 7,300 area. But for now, it's looking safe, sitting above the 50-day EMA. Weekly chart for the NASDAQ 100. Here we go, rising trend line, or rising trend channel going on here. But if we were to get in and annotate, we probably could see at this point a rising wedge on the NASDAQ weekly chart, which could be considered a problem. And then notice right now, we do have a pending PMO sell signal on the weekly chart for the NASDAQ 100. And we don't log that signal until after the final hour of trading on the end of the week. So these signals don't go final on a weekly chart until the final trading day of the week. So we'll have to see if this one stays intact. I think we had it sitting out there last weekend, but it didn't end up triggering. So we'll just have to wait, watch, and see, as you say. OEX S&P 100. This is a rising wedge. I think there's no arguing that. I didn't put this top part of the wedge in blue, but I think you can use your imagination very easily and see a rising wedge in the shorter term. Now, over the intermediate term, we do still have what I would consider a rising trend channel. So I don't think we're really at that parabolic stage. I know Carl's watching a possible parabolic rather closely. I recommend you go read his article to get a feel for what he's talking about there. But to me, we're holding that rising bottoms trend line barely. If we get that breakdown, we are vulnerable to a drop all the way down to 1240 for the S&P 100. I just don't see that. It's just, we're going to more than likely move down, test that 50-day EMA, I think, at an extreme if we break down from that rising bottoms trend line that we're seeing right now. Weekly chart for the OEX, rising trend channel. Also, you can see where we are vulnerable to that drop down to that 1240, 1250 area. If you look at the weekly chart, we're vulnerable for even more downside. But look we've got a PMO that is rising. Granted, we are seeing some deceleration, but we got a top after making new all-time highs. So I think that the weekly charts so far aren't looking too negative. S&P daily chart, the S&P 500. Let's take a peek. We did get that sell signal, as I pointed out at the beginning of this segment. And in the case of the S&P 500, we didn't even get down to test that rising bottoms trend line. Typically, I take that as a especially bullish sign because it didn't need to go that far down. It tested that 20-day EMA successfully, closed just above it. And now we're seeing a little bit of a rally pop following that on the S&P 500. It is back above the all-time high from back in January, and it is also above that high we saw in mid-August. Weekly chart for the S&P 500. All right. You can see we are still on that buy signal. As with the other three large cap indexes, you've got the PMO in the weekly time frame, intermediate term time frame, starting to decelerate, but still rising. I think that, like I said, that is that's a positive. I could bring this trend line down slightly because we know that price is still above this all-time high. And like I said, I think that is the key support level that we need to be watching right now. All right, let's look at the S&P 400. Move along here. All right, it's also holding its support level at this previous all-time high that we saw at the beginning of August. Notice the character of this chart versus the larger cap indexes that we were looking at, the S&P 500, 100. You've got prices beat out the January top back here. You can look all the way back here in June and continued to make some new all-time highs, continued to make a new all-time high back here at the end of August. So we are starting to see a pullback on price, but it held the 20-day EMA and it is holding that support level at this previous top back in August. So I think that mid caps look a little stronger than those large cap indexes, but let's look at the weekly chart. Yes, see the rising trend channel. At this point, I think we could draw a rising trend channel that's a little skinnier here in the middle of the longer term one. I don't think it's really necessary. The only caution I would say on this chart is the fact we do have that PMO. It is now turning down. So I probably should update that, say turning down and not up. But we can see that over the last week, we ended up getting a move to the downside here on that PMO, whereas we didn't see that on the other large cap indexes. So kind of interesting to see a full top on the PMO on the weekly chart for the mid caps. The small caps. There we go. And also holding support at these previous all-time highs. And like I said, the character of this chart actually, also looks better than those large cap indexes. Like I said, we left that January top behind and the March top where we had all-time highs. We left that behind back in May for the small caps. And I know we had talked about it a lot on the show that what we were looking at was, a nice move because the dollar was rising and it was hurting those large caps. And so you really got that head start as far as the small caps go. Right now, we're holding that support level, bounced off of that. But there is a caution flag here in that we do have a PMO sell signal lining up. This is not official yet. It's just coming into play today. So we do need to wait for the market to close to see if it's going to stick. But I like the fact we are holding support above those tops from June and July. You look at the weekly chart for the small caps. There we go. We do see a PMO top. But the PMO top that just came in was higher than the previous one. I think that's a positive. It sets up a nice confirmation here with price. I'd say they're both rising. And, we do have it in decline currently, could be coming down for a PMO sell signal on the weekly chart. But I think the small caps, they still look really strong in comparison to the large caps. I'm not expecting to see a sell signal on the weekly chart for a little while. All right, let's look at the indicators for Decision Point as to what they're saying about the market in general and the S&P 500 somewhat specifically here. Let's make this a little bigger for us. All right, one of the things I pointed out on Friday or Thursday, I think when I wrote, actually it was on Thursday, was that I noticed that we had the new highs holding up despite prices moving lower on the S&P 500. We were seeing the deterioration here on the advanced declines, net advances declines on the breadth here. But you could see, and this is from Friday, you can see we were already seeing a little bit of relief here, at least as far as the volume was concerned. And we held on to these new highs despite that rising or declining price. So to me, that said, look for a rally pop coming into this week. We got one at the beginning of the day, but it looks like we're already pulling back from that. I was expecting to see a little bit more upside past that, but now I'm looking at the VIX and, we got the penetration of that lower Bollinger Band. And again, that was speaking to me of a rally pop coming up. So not only did we have these new highs with, a lot of the market, the S&P 500 making new highs despite a price decline. And it came in with an extreme on the VIX. So like I said, looking for some more upside. I still am thinking we'll see a little bit more upside, but everything else looks rather weak. Look at the short-term indicators right now. They are in decline. I did notice, and Carl did write about it, that on Friday, the STOB did tick upward. I think that is a positive, but we're not seeing that participation from the volume oscillator. And I want to see them working together. If volume continues lower and we see the other indicator rising, that tells me that there's some problem with volume despite a price rise, despite the breadth rising. If we don't have volume participating, that could be a big problem. So we'll want to keep an eye on that. But currently, we are getting to some oversold levels in the near term, but I think we could stand to lose a little bit more on these indicators to the downside. And you could see we had a bit of a fake out back here at the end of August. So I wouldn't put too much into, read too much into this tick to the upside on the short-term indicators. Part of that, the intermediate term indicators are looking pretty darn negative right now. We have a negative divergence with the volume portion of the indicator, the ITVM. I do not like to see lower tops on the volume indicators. And remember, I was just showing you that the volume indicator in the short term, the STOV, was not participating. So I don't want to see the same thing happening here on the intermediate term indicators, and I have that decline of the indicator, the volume indicators with the rise in price. That's a negative divergence. Typically, when we see that divergence, especially when you have the other indicator not really deteriorating like it should, that does tend to lead to a downside move. Of course, it did precede the big drop we had back in January and the fairly deep correction that we had here back at the beginning of March, May. So I'll be watching this one rather closely. At this point, watch those rising bottoms trend lines. We do not want to see those indicators break down below those. All right, let's move into the big four. I'll go through these pretty quickly. All right, we have the dollar. It's been showing a lot of negative tendencies here as far as the indicators go, but we're seeing that scooter improving somewhat. We've got OBV turning back up, which is a good sign, but the PMO is still drifting lower. And we've got a lot of bouncy, volatile readings here lately on UUP. And we're back down below this area that I had marked as support earlier. And if you wanted to drag this a little bit higher, just going to do that for grins here to that right there, the gap support. We saw it hit that, it turned into resistance, and we saw it hit that on Friday and then fall back. I would expect to see some more downside action here on UUP. I'm not particularly bullish when I look at this chart. All right, weekly for UUP as well on the dollar. Go, make it big, there we are, okay. PMO buy signal on the weekly chart. We did start to see some deceleration here based on this pullback clearly that we had from the beginning of August on down. But here's this area also of resistance. Remember, I marked it, I drug it up a little bit to that gap area that we had, but notice that it does line up as well with some tops we saw previously. It's not able to get it back above that. And with a decelerating PMO on the weekly chart, I'm just not ready to get too bullish on the dollar. But gold, while technically it looks fairly good as far as the indicators, it just hasn't really popped like it should, in my opinion. We had a PMO buy signal hit here back in August, and we just haven't seen much action off of that. Yes, we got the pop up here to test that 1220 area, but it's pulled back down. It is holding this rising bottoms trend line in the very short term, and the PMO is rising still. So I have to remain bullish on gold and look for a bounce off of this area, the 1200 area. I think worst case, we might go down and test this declining tops trend line and then head back up. But, gold is set up. It really should be doing better than it is. And so that's what I'm going to be looking toward, is gold to do better than it is. The weekly chart, the weekly picture isn't particularly bullish. However, notice I wanted to really point out the discount and premiums that we're watching right now on gold. And we've got such bearish sentiment out there as far as gold goes. And typically when you get the really bearish sentiment, remember, sentiment is contrarian. And, there you go. We're seeing very bearish sentiment. We should be seeing a move to the upside in gold. It's not quite happened yet, but technically I think it still looks like it should, at least in the shorter term. USO oil pulled back. We got that move to the upside, and it looked like we were going to be able to maintain above that 1475 level, but it never was able to close above it and has pulled back. Didn't have to go down to test this declining tops trend line and is on its way back up. I'd like to see it close above that 20-day EMA because PMO is looking pretty ugly, as is the OBV. Weekly, very quickly here. Not much going on here on the weekly chart for USO. I do see a continuation pattern of a symmetrical triangle. So again, I would be looking for some upside, not like in the PMO setup here, but ultimately, this rising bottoms trend line has been holding. I'm still looking for oil to hold at about 14. All right, bonds. I still think they look really negative. I've got a double top now, in my opinion, setting up here on TLT. If you wanted to include this, you could make it a head and shoulders pattern if you wanted, but I think this looks more like a double top to me. I'm expecting a test at least down to 117.75. PMO is supporting it, and look at the OBV. If we get a drop below this level, I think it's telling us we should see an execution of that double top. And on the weekly chart, I'm still watching this very long-term head and shoulders pattern that's set up. I don't think that it is disintegrated quite yet because it hasn't managed to pop up above that declining tops trend line. And now we can see the weekly PMO trimming down. And that concludes the decision point report. We can look really quickly here at our summary. I did want to point out the fact that we do have those two new PMO sell signals, and we should see another one come in on the Dow at the end of the day. And then as far as our indicators go, I still think that, we're mixed. I think there's still some bullishness set up for the very short term, possibly in the short term, but the mixed direction is bothering me. Volume participations bother me. Intermediate term indicators, I think, are certainly bearish. As far as the big four, there you go. I'm not going to read them all to you, but bearish on dollar, bullish on gold, neutral for oil, and bearish on bonds right now. I will have these charts in the Market Watchers Live recap today, so you'll be able to look at them a little more closely then. And that concludes the decision point report. Bringing you back, Tom. Let's say our goodbyes and look forward to tomorrow.
Yeah, I will say later this week, there's not really a whole lot of news economically until we get to Thursday. And from an earnings perspective, I think we have Oracle that reports on Thursday along with Kroger, but really not much in the way of earnings either. So the market's going to be left to trade technically for the balance of the week.
Yep. We'll see how it goes. Like I said, I'm still looking for a little bit more upside before we start moving to the downside by the end of the week. But yeah, we'll see.
I think the market still looks pretty good here. We'll see what leads if we continue moving higher, but definitely, at least in the short term, I think things still look okay. All right, I want to thank everybody for being with us today. Please remember to complete the survey as you exit. We do love to get your feedback, hear what you think of Market Watchers Live. Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Monday afternoon, everybody. Enjoy your week. Watch these hurricanes, and we'll see you back here tomorrow. Happy trading.
Here's how to put a simple line on your chart without using the annotation tool. Let's say we want a line in here at 47.50. You can just drop down here into the overlays, pick horizontal line, add the price point, 47.5, and we're going to use a red line. We're going to make it solid and thick and hit update, and that blasts it into the middle of your chart.